So it's a 2.6% gain that you have on the Hong Kong markets.
When people ignore the hours worked, and that fell.
India's priority has got to be to maintain growth at a good level.
Key reason for the downgrade is the fact that the stock has rallied 31% in the last 2 months.
And Nifty is up about 30 odd points.
If you look at the month of November, and if you look at MSCI Asia ex-Japan, it saw a 17% rally. It's the second highest in the history that you've seen a single month rally of as much as 17%.
We actually had a very robust November sales in tractors, growing our domestic volume by 11%.
We are in a situation of an US labor market which is going to have a high vacancy rate, low unemployment rate.
The swap ratio told you if you have 100 shares of Mindtree, you will get 73 shares of LTI.
If you look at the copper prices itself, we saw nearly 6% of gains in the previous week. It's trading at a 4-month high.
On the positive side, the collection efficiency was robust, coming in at 96%.
The stock is up close to 7% in today's trading session on the back of strong volumes as well.
Even though the G20 is not a security forum, everyone is thinking about the impact of the Russia-Ukraine war.
Right now, Nifty is down 50 points.
That was the day so far. Hello and welcome to Closing Bell. I'm Reema Tendulkar. With me is Nigel D'Souza in the studio this time, and Mangala Malu is in the newsroom. Good morning, boys. Fairly muted session, right, for our markets. The story is all happening in China and whether or not it's going to reopen and what will the ferocity of the rebound economy is going to be like. Just take stock of what happened in Asia this morning. Hang Seng up 4.5%. Chinese markets up 1.5% and 2%. Stripped of that, the rest of the Asian markets were pretty muted. We're talking about the Taiwanese markets, the Korean markets, and even the Indian markets right now. The Indian markets, as we speak, are just down close to about 0.1%. There has been a bit of a rebound that you are seeing. First, the fall from the top, and then the rebound in the last 10 minutes. The story is in the metal space. The top Nifty gainers today are all the metal stocks, whether it's Tata Steel, JSW Steel. These are stocks which are ruling the roost and providing the leadership. The metal index is up close to about 1.5%. Your sector, and I think this is a sector which is also fairly under-owned.
Yeah.
So there is that, money rotating back into metals now.
Well, I'll tell you what, Reema, it's good to see that some of these metal stocks are bouncing back, but it may not be such good news for the earnings picture.
Yeah.
The big trigger was that metal prices have been cooling off, so we're seeing a bounce, but let's see whether or not it sustains, because demand needs to pick up. For the time being. It's just the reopening that's there. And as of now, the steel prices domestically, they're still at a premium in comparison to imported steel. So there is some bit of correction that needs to happen. But we have seen the prices in the Chinese market bounce up, which is good for the global ferrous space. Well, getting back to our markets, the buy on dips is working yet again. If you pull up the Nifty chart, intraday you'll see that the dips have got bought into. Even the last 1 hour or so, we were down 50-60 points out. That dip has got bought into. The day's low was around 18,591. And if you got it in that vicinity, earlier today, the call was 18,600 odd. That should be the level that you should be looking to get into. And if you got in there, you'll be pretty happy as well. On the option side, well, there's writing been seen at around the 18,700 put. And you just plug in the premium, it was around 100 rupees at the start of today. So that's why you get that stop loss closer to around 18,600. However, on the upside, the 18,700 call, the 18,800 call, well, they are very, very active today. So just plugging in the numbers, at the start of today, the 18,700 call, the premium was 115 rupees odd. So the crucial resistance zone or the supply zone will be around 18,815 to the highs that we saw last week. That's 18,888 odd. That seems to be a bit of a congestion zone, and we have a big trigger coming up in terms of the RBI policy as well. So let's see what the RBI governor has to say. Otherwise, buy on dips does continue, and the bulls will be pretty happy with today's outcome, not because of the Nifty, but the breadth of the market is still positive, and the mid-cap index continues to see a relative outperformance. Manglam, what else are you tracking?
I'm looking at the mid-cap index itself, Nigel, because the FIIs, they're writing calls in index options. At the same time, we're looking at a lot of call writing, like you're pointing out. But importantly, while the markets are in a bit of a range, a tug of war between 18,550 to around 18,750 on the way up, it is the breadth of the market which is looking good for the third or fourth day running. In fact, the mid-cap index has hit a fresh record high. Remember all of last week when the Nifty was hitting record highs, we were talking about the sensex as well as the Nifty bank. It was the mid-cap index, which took a step back at that point in time. But now, over the last few trading sessions, the month of December, the three trading sessions that we've had have been very good for the mid-cap index. The index itself is up around 1.75%, whereas the Nifty is actually down by about 0.5%. The advanced decline ratio indicates that, there is strong momentum in terms of advances. Almost 1,800 to 2,000 stocks on a daily basis over the last few trading sessions have been hitting greens. In fact, as we speak, a lot of stocks are doing extremely well. PSU banks, which have been doing well all through this year. Canara Bank has moved to the high point of trade. PSUs as a basket have been doing well. BEL2 has moved to the high point of trade, and giving it company are a bunch of other stocks as well. Bank of Baroda too has spiked from the lows of trade. So portfolios in December so far have looked much better than they did in November, despite the Nifty actually hitting a fresh record high in November itself.
Interesting, Mangalam, thank you very much. You spoke about how metal prices, it's not such a good thing for commodity consumers and therefore the earnings picture, etc. in India. Guess what happens to global inflation, right?
Yeah.
And if global inflation starts spiking again, then we run the risk of the Fed again, tightening after just about trying to indicate that perhaps the pace of, hikes is going to slow down. So that's going to be a worry in 2023 for the markets.
Yeah, and remember, before you tell us what we have on the show, just one more point. We've been looking at the earnings picture, and for quarter two, we will say we had an earnings growth, the Nifty earnings growth of around 7 to 9%. The NSE 500 companies, there's a degrowth of closer around 3%. And the hope is that all of that will reverse in the second half of this year from quarter four onwards. So hopefully the metal prices, they cool off, from an earnings perspective, but good going for the metal stocks. They have a fair bit of momentum today.
Okay, we'll discuss all that and more. Let's tell you what we've lined up on closing bell today. Samvardhana, Motherson is higher in trade today. What's gotten the stock excited? Details coming up. Voltas will also be on our radar as CLSA upgrades the rating on the stock. Rationale details coming up in our special segment, Standout Brokerage. We'll also put the spotlight on Infosys. Details on the buyback with the expectation, the timeline coming up. M&M reports a very strong November sales data. Key excerpts from our conversation with the management also on the show. And finally, the alpha manager for the day, Rupesh Patel of Nippon India Mutual Fund, to discuss his stock portfolio bets.
So that's all we have for you in the show today. But how should you position yourself in the last hour of trade? Mitesh Thakkar of earningswaves.com joins in now with the closing strategies. Mitesh, the dip has been bought into, but at the same time, higher levels are facing some sort of congestion. So we are in a bit of a range. Where do you think we're going from here?
Good afternoon, Mangalam. I think this range might play out for next few days. It is not a market which is weak. It is not a market which is correcting, but it is a market which has had a rally from 18,100 to about 18,880 odd levels, and now it's kind of giving away some gains, giving a pullback to the moving averages. Some overbought indicators are getting corrected. So it's a market which is most likely to contract for the next 2 to 3 sessions, and therefore I think the idea should be to buy on dips. Now we've been worrying about which level to enter into. We looked at about possibility of 18,450, 470 as the worst case scenario. So we haven't bought today's dip, but yeah, I think, you're still trying to find your feet at higher levels. That's not a bad thing. And therefore, I think, we must construe that barring this pullback, the overall trend is healthy and on the upside. So trading with more of long bias on stock specific basis. I have a buy on Coal India, which is reversing after a good correction for last couple of weeks. That's a buy with a stop below levels of 228 for targets of 240. And the other one which I like is Chola Finance. That's a buy as well. Keep a stop below levels of 730 here. Look for targets of 765.
Okay, all right. Thanks a lot for that, Mitesh. Well, from the broader markets, one space that's doing very, very well today is the NBFC space. Pyramid Enterprises has been a big underperformer, but today it's popped up and trades are pretty good going out there. Aditya Birla Capital as well is up and about, and even gold finance companies actually are doing pretty well. Dilip Bhatt, market expert and stock market veteran, well, he's joining in to give us his take on the markets. Hi, Dilip. Good afternoon. Thanks so much for joining in. Well, these NBFCs, they are bounced back. Now, the fear is that in the second half of this year, rates are going to go up, the cost of borrowing is going to go up. So since they don't have strength on the liability side, well, their NIMs are going to get compressed. How would you approach this theme?
Good afternoon, Nigel. I think we are talking about a scenario where possibly and hopefully the interest rates are near peak or would have peaked out maybe in next 2 quarters. That is what it appears. Or it is almost at a reasonable high at the moment. I would say that, yes, they don't have the elbow room or the luxury of getting a good liability inflows. So I think, yes, their margins will be compressed without any doubt. But I think the larger picture is whether the volume growth is going to happen, whether the credit growth is going to happen. And in that case, the NIS could grow, but you could have a smaller NIM. I think that is how one should look at this entire perspective. But markets will react very positively on the interest rate movements, where we broadly feel that maybe over next 2 quarters it would have peaked out, or it would have started coming down. We don't see any great spike in inflation or even in the interest rates from here on over next 2 quarters. So I think NBFCs as a part of the overall banking space, and where the discretionary spending happens in a big way, I think the NBFCs look pretty good and pretty interesting from the current levels.
Okay, NBFC is on fire. Take a look at Satin Credit Care. It's up 15% today. In the last 5 days, the stock has been moving higher. The rally started at 130 and now it's extended to 168. M&M Finance, as we've been saying, that how the November disbursements very strong, 14% up month on month, 75% higher on a year-on-year basis. And if you look at the year-to-date disbursements, they're up 99% for M&M Finance. Edelweiss Finance, Manappuram General Finance, where Morgan Stanley has given it a thumbs up. And plus, gold prices itself are at a 5-month high. So Manappuram General Finance too is among the big movers in the NBFC space. But another one that we're tracking is Samvardhana Motherson. The stock is higher by close to 2%. Sonia is here to tell us more. Sonia?
Well, thanks a lot for that. So, Samvardhana Motherson met with analysts and they reiterated their guidance for achieving $36 billion target by FY25. And they said that, how they plan to achieve that target is something they spoke about at this meeting. So this is what they plan, a group revenue to reach $36 billion by FY25. Currently, on an annualized basis, the revenue is about $12 billion. They expect an ROC of 40%. They say that no country, customer or component will be more than 10% of turnover. And the automotive segment will continue to be 75% of their total turnover. They'll continue to give a dividend payout ratio of about 40% of profits. And they're looking at very strong growth from some of their new verticals, whether it's aerospace, logistics, health, as well as technology. They're also looking at one large acquisition to the tune of about $15 billion. And that will help them achieve this target of $36 billion by FY25. So that's their 5-year plan. Citi put out a note where they say that the growth aspirations of Motherson are quite ambitious. They say that the return ratios as well as the margins could be compromised at the cost of achieving their revenue target. So they could achieve their revenue target because of the acquisitions, but they could compromise on margins as well. Back to you.
Thank you very much for that. Dilip, this is a company where the global interlinkages are very high. So one has to take a call of what's happening with Europe, the global economy, to take stock of the near-term performance of, Motherson Samvardhana. Your thoughts on the stock?
Well, let me tell you one thing, that this stock is always a part of the core portfolio for us, and I think it should be, because they have time and again demonstrated that not only they do the acquisition very well, they have enough management bandwidth to carry out and execute. So I think with all that, it certainly merits a look. But certainly, I think this time with a $15 billion acquisition that they're talking about, I think it's really very, it's a big acquisition without any doubt. And going by the past track record, yes, they can do it, but I would be a little more cautious from the current levels, though the management has given a very strong guidance with a 40% ROC. So possibly, generally when you have that kind of an ROC, you don't require to raise funds. But this $15 billion acquisition at one go will require some fundraising. There will be some dilution. That's what we think. So from the current levels, I would prefer to wait and watch, not be in a hurry to buy the stock. But as what I said, on a very long-term basis, yes, the stock merits a look as should be a part of your core portfolio. But I'm not in a hurry to buy right now.
All right, we take that point. In fact, as we speak, as on cue, we're getting some numbers coming in from Tata Motors, JLR, UK sales as well, up 2.6%, 4,200 units. It's a 15% jump month on month as well. But right now, in their overall scheme of things, JLR, UK sales have been much lower. Important to find out what happens in China, etc., and the other parts of the world too. But sticking with the auto theme itself, M&M reported very strong sales in November in both the tractor as well as the auto segments. We caught up with Rajesh Jejurikar, who's the ED Auto and Farm sectors at Mahindra & Mahindra, to understand the fine print in November sales. Let's hear him out, and then we get chatting with Dilip once again.
We have said a little over 5%, and we'll stay with that. So November was better than what we had expected, and let's wait and watch how that goes. We actually had a very robust November sales in tractors, growing our domestic volume by 11%. We gained 2% market share, and hence cumulative on the tractor side, we are actually 0.9% market share gain, which on our level of volume is a very substantial gain. So we continue to do well with the very strong product offering on the Mahindra tractors and the Swaraj tractors both. The Yuvo Tech, which we had launched a few months back, is doing very well and helping us gain market share. We believe that with the product portfolio that we have, we will see a very strong demand momentum. And except for some very significant setback on the macroeconomic front, we expect the current demand momentum to continue. We will start bookings towards the end of for XUV400, which is our electric offering that we'll bring out. It'll be our first real electric SUV offering, and we'll start bookings towards the end of January and start delivery soon after that. We haven't yet declared or said what we're going to target. Let's wait and watch what kind of bookings we get. We'll be starting the test drives later in the month of December. Like we've said, we would like to get customer feedback as we get into the test drive. We have seen a significant improvement in our margin over the last 3-4 quarters on the auto side. It was in the region of 3.6% towards Q3 of the last year, and it's moved up to over 6% right now. This has happened through operating leverage, cost reductions, some of the products which were launched earlier, getting out of the the initial booking price which we had held on to. We have seen a significant improvement in our margin, and there is a lot of focus on driving costs down as we go forward.
All right, so that's the view coming in on M&M. They're focusing on driving costs down. In fact, as we speak, Hero MotoCorp is one of the stocks which has moved to the high point of trade. Dilip, we've had a few days to parse over the data that came in from November auto sales. The broad theme was that exports did not do too well. There is some improvement in on the retail side, and that will only start to be visible in the wholesale side going forward as well. Are there any stocks that you like in the auto space? Four-wheelers, two-wheelers, off-highway, vehicles? Any company in specific that you like? You've liked Hero MotoCorp in the past.
So I think the entire auto sector is having a tailwind in terms of the softer commodity prices on the back of the fact that they had already taken a price increase. So it's a kind of a double whammy in a very positive way for them. And as what the gentleman very rightly pointed out, that we are seeing a good growth in the current year, which is where the operating leverage really plays out in a very big way. So all in all, the entire auto sector is having a very strong tailwind. But within this particular sector, I think I would still go for something like a Maruti. One, I think second, M&M also, but M&M also had a very good run-up. But still, I would say that this is one of the stock that one should play. And I think Ashok Leyland is one which is a pure CV play. I think that's another stock which holds a very good promise in the medium to long term. So I think some of these stocks look pretty interesting from the primary auto space. And I think next 1 or 2 years is going to be good in terms of the volumes as well as in terms of a softer commodity prices for them.
Okay, got that. Dilip, I request you to stay with us. For the time being, we'll slip into a short break. On the other side, we'll be joined by Alpha Manager of the Day, Rupesh Patel of Nippon India Mutual Fund. He'll discuss his top portfolio bets and the market outlook as well. Welcome back. Well, the market's a little bit lower as we speak, but par for the course because of the kind of outperformance you've seen from the broader markets. We're in conversation with Dilip Bhatt. Dilip, one stock that listed in the past year or so was Army Organics. I remember it listed, it went dancing away to around 1,300 odd. It's come off considerably, but there was some fund action we saw in the last week or so. What's your view on this one?
I think Army Organics, very frankly, if you see the track record of the past 5 years, they have shown an ROC of around 23-24%. I think they have shown a reasonably 20% plus CAGR in the top line. And I think their EBITDA margin also is pretty good. So that sets a very good background for the company. But I think going forward, what we say is that a minimum 23 to 24% compounded top line growth for next 3 years, because they have just done an acquisition, if you remember, last year. And I think it's going to play out in a very big way. I think there are some of the catalysts which they are working on also can be a big trigger for the company. So I think next 3 years, I see a top line of around 23-24% CAGR growth, and bottom line should grow, in my opinion, much ahead of that for the next couple of years. I think this is a stock which is in a very niche segment. At the same time, being in the niche segment, still they can have a scalable growth. So all in all, this is a company which definitely I would say that one should have it in the portfolio with a minimum time frame of 12 to 50. I see a very good appreciation over long term.
All right, take that point, Dilip. Just hang in there because we do have a bunch of stocks which are in focus right now. In fact, as we speak, before we go to them, just keep an eye out on the Nifty Bank. The Nifty Bank is moving once again towards the high point of trade, and that's led higher by HDFC Bank, which of course is the biggest weight on that index. So HDFC Bank is making an attempt towards the high point of trade. SBI is not doing too badly. In fact, SBI too has moved to the high point of trade, and giving these two companies is Kotak Mahindra Bank, which is doing well as well. So it'll be interesting to see, if the Nifty Bank rally and the Nifty Bank move towards the high point of trade actually does take the Nifty along with it or not. The Nifty still just below the flat line as we speak. The other stock on our radar is Voltas. That's the one, as CLSA has upgraded the stock. Nimesh joins in with the details on special standout brokerage. Nimesh, Voltas, CLSA likes it.
CLSA likes it, and Manglam, surprisingly, after a long time, I've seen a bit of an upgrade on Voltas, so that's why it stood out for me. Now, CLSA has upgraded the stock to outperform from sell, and they have a target price of 935. They believe that the stock's Y2D underperformance largely captures in most of the negatives, and the underperformance of Voltas is largely because of the intense competition in the AC market, where they've lost market share, and there has been a loss of margins as well. Going forward, CLSA expects that in the medium term, the growth in the AC market is going to be high single digit, and at the industry level, they expect the margins to recover as the commodities prices keep softening. So that's been the key reason why they've upgraded the stock. Even in terms of valuations at 37 times, 1 year forward price to earning, the stock is trading in line with the past 7-year median. So on back of valuations attractive and the fact that commodity prices are cooling off, CLSA has gone ahead and upgraded Voltas to an outperform now with a target price of 935.
Nimesh, thank you very much for that. The 52-week low on Voltas was hit only on 21st November, so that's just 2 weeks ago. And since then, we've seen a bit of a recovery, but the stock has been languishing for a while now on fears that it's been losing market share. Dilip, given its underperformance, given the valuation comfort which Nimesh was highlighting, is this an opportune time to bet on Voltas?
Sure, I think Voltas certainly deserves a look because it's not gone anywhere as far as the stock price is concerned. But largely, as what we can see, the white goods segment as such suffered quite a bit in terms of their sales in the last 6 to 9 months. And it's not just confined to Voltas. I think overall, it was a very muted kind of growth for most of the companies. And possibly if Voltas was one of the few companies which also lost the market share. But having said all that, I think from the current levels on a risk-return basis, the risk appears limited with a tailwind of the commodity prices being in favor of them and gradual revival in the economy, especially for the white goods segment. I think bodes well for this entire white goods segment. And I think Voltas certainly stands out as one of the candidates where the risk return is strongly loaded in favor of the returns. So from the current, there is no fresh trigger as what I can see, but I think it's a long journey, but still from the current level, it looks pretty attractive.
Okay, all right. Good to speak to you. Dilip, thanks so much for stopping by and giving us your view on a whole host of stocks. Look forward to having a chat with you rather soon. Well, for the time being, though, let's get to Mr. Rupesh Patel, the Senior Fund Manager, Equity Investments at Nippon India Mutual Fund, who joins us on the show. Hi, Rupesh. Thanks so much for joining in. Well, what do you do? Markets overheated or not? Which side are you swinging?
Yeah, actually, I mean, if we look at markets, then markets have given very handsome returns from COVID lows. And when we look at current context, I think we have to be mindful of global uncertainties. The narrative around inflation, interest rates is already playing out, and very soon we'll be worrying about slowdown in growth and how this economic slowdown will impact corporate earnings growth. So when we look at this background and look at our valuations, I think from here on, we cannot bet on PE re-rating for making money. From here on, I believe it would be more earnings growth driven. So you have to look at sectors, companies where the visibility on earnings growth is better. I think that's how we are positioning our portfolio in times like this.
So let's talk about those sectors itself, Rupesh. I mean, what are the places where you believe that earnings growth can actually outbeat the other parts of the market? And what are the sectors you think one should avoid because of them having run up much more than what earnings would justify?
So when today we look at our portfolios, we are significantly overweight on banks. And within these banks, our exposure is more on these larger banks where we believe that the credit costs, related worries, they are history now. Economic momentum is strong, so unlikely that credit costs will go up meaningfully from here on. Whatever NPAs were there in previous cycle, they have been well recognized and provided for. So there is comfort on credit costs. We have seen, as far as these large lenders are concerned, they are very well capitalized. We have seen pickup in credit growth, and margins have also held up pretty well in this environment. On top of that, when interest rates are going up, having a good, strong CASA franchisee really helps in terms of keeping cost of funds under check. So, when we look at all these parameters, whether it is growth, whether it is margin, whether it is credit cost, I think banks very clearly stand out, and that's where we have significant overweight position in our portfolio. We do have exposure to some non-bank financials as well, like insurance over there. The sector where we are underweight today is IT, even though IT has undergone a meaningful correction from its highs. We believe that in this current environment, when there are already worries on global slowdown, we need to see the extrapolation in earnings growth, which happened after COVID. To what extent those expectations really are met. We believe that there is risk for those estimates to go down, and if the growth in these IT companies have to revert to pre-COVID levels, then the valuations are still on the higher side. So that's one space where we still have significant underweight stance in our portfolios.
Overweight banks and select NBFCs and underweight IT. Rupesh, do stay on the subject of NBFC. There is an important update. The Shriram Group formally announced the structure of the merged entity today. As we know, the promoter company Shriram Capital and the SME lenders Shriram City Union were merged into the group's flagship Shriram Transport effective April. Lata is here with the key announcements made today and the leads about the story from here on.
Well, the listing of the new share, that is Shriram Transport, which is now being called Shriram Finance, will happen to reflect the merger in 2 weeks. That's the key that we got, and the major appointments. All the appointments also are on expected lines, or as pre-announced lines. Vice Chairman will be Mr. Umesh Revankar, who was formerly heading Shriram Transport, and Mr. Y.S. Chakravarti, who was heading Shriram City Union, will be the Managing Director and CEO of the new company. He gets a 3-year term. Those are the formal announcements come today. But effectively what this means is that the second largest NBFC is born. their total AUM, if you put Shriram City Union and Transport together, it's about 1.7 lakh crore. And Bajaj Finance, if you only take their retail book, will be about 1.8 lakh crore. So a fairly important giant has emerged. Now, what do the company sources say about the merger? They spoke to us after the press conference, and they say that the merger cost in terms of duties was about 200 crore and another 500 crore in terms of other expenses. But the gain will be that now the merged entity will get Shriram Transport's rating, which is AA+. Shriram City Union did not have that rating. So overall, the cost of funds will be an advantage. They don't see any impact of the rise in rates in the market on them in terms of their margins, indicating they probably can pass it on. They see a lot of synergy, of course, in terms of people in Shriram City Union being able to sell transport loans, or both entities being able to sell more kinds of loans to the same clientele. That's where they see synergies coming. And, the product question to them is whether now that you don't have, any large one single conglomerate holding you, will there be any talks of being a bank? These sources brushed aside the question, saying that discussions are always there in the board about many things, but they intend to operate as an NBFC because they are better able to serve peripheral areas. The other big question, of course, is that Piramal Enterprises, which is now a big NBFC in its own right, has publicly stated that it wants to exit Shriram Group. So the management sources that spoke to us said that they are talking to a lot of people, to funds, and they see a lot of interest, so they don't see it as a major overhang.
Thank you very much for that comprehensive analysis. Lata, Rupesh, any thoughts on Shriram Transport in its new avatar?
I'm sorry, I can't comment on individual names.
All right. But we've seen very strong updates even from Mahindra Finance in terms of the kind of growth rates that we've had. I think disbursements are up 75% on a year-on-year basis. Broadly, you spoke about insurance, NBFC. But what about these auto financiers, gold financiers in the NBFC pack? Is that a pack which is attractive to you?
So as I mentioned, as of now, our overweight stance on financials is more through these large banks. And we are restricting ourselves to these banks. I mean, maybe one HFC is there and some insurance exposures.
Rupesh, there's a raging debate out there. Some of these new age companies, have they corrected enough? And both sides of the story are looking quite strong. The bullish and the bearish argument. Where are you placed? You must be using their services. But from a stock market perspective, what do you do at these prices?
Yeah, that's an interesting question. So today, when we look at some of these business models, the growth opportunity is huge. And some of them will really succeed and will successfully and profitably will be able to capture this huge opportunity. Today, how much of this is still there in the valuations, that's a matter of debate. Our approach is more that, instead of betting big on one single name, as this volatility will give us better entry points, maybe we'll look at making a basket of some of these names. And that's how we would look at playing them going ahead.
Right. Before we speak about some more sectors and stocks, Rupesh, just a bunch of stocks which are spiking as we speak. TTK Healthcare is now up 12% and volumes are piling on that one. In fact, most of the gains have come by in just the last few seconds. And it's been a vertical rally on TTK Healthcare. Tega Industries is the other one which is locked in temporary 10% freeze. Finolex Industries is another one which is buzzing around as well. Of course, we've been speaking about a lot of these NBFCs, and Suryodaya SFB is one which has done well. From new age companies, Rupesh, let's talk about some of these old age companies. A lot of people are now talking about some more capex or some more requirement coming in old energy stocks, the kinds of coal as well as the old power stocks, etc. Are you looking at some pockets of value there, and you believe that maybe the ESG theme led to a lot of underinvestments in this sector, and now there is room for further growth here?
No doubt. I think it's a great question. I mean, today when we look at universe, the investment universe, then in power sector, we do feel that there are certain opportunities which are looking interesting. If we look at the growth in power demand, if we look at our installed capacity and look at our commitments in terms of adding renewable to our existing installed capacity base, I think going ahead there can be some interesting opportunities coming up in the sector. Now it needs to be seen whether it would be on the BTG side or on the transmission distribution equipment provider side, but or the EPC contractors. But I think the space has started looking interesting, and we do have some exposure to some power generators in our portfolio.
Rupesh, thank you very much for joining in. Pleasure chatting with you today. We need to slip into a break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also tell you what you can buy today, sell tomorrow, calls from our technical experts. Welcome back. Some of these banks are having a very good session. Take a look at J&K Bank. The stock is up close to about 10% in trade. It's spiked up. South Indian Bank is another one, a 5.5% rally you would see. Punjab and Sindh Bank has gained close to about 6.5%. So some buying is emerging. Big boy, SBI. That one started to move. SBI is now up close to about 1.5%. And this has powered the Nifty Bank to a gain of more than 200 points at an index level, up close to about 0.5%. Mitesh Thakkar is back with us. He's going to tell us what you can buy today to sell tomorrow or a reverse trade. Mitesh, how have you read the up move that we're seeing in the last few minutes, particularly in the banking names and your trade?
Yeah, I think this up move is nothing but, after the pullback has been over, we have hit some moving averages and are trying to bounce back. Still, to me, it looks like a market which might contract and consolidate a bit for a couple of days before moving up. But yeah, the directional bias is on the upside. So trade with long ideas on stock side as well. Federal Bank is a BTST. Keep a stop below 135.5 for targets of 140 for tomorrow. And the other one which I like is Godrej Properties. That's moved up very nicely trading near the day's high. That's a BTST with a stop just below levels of 1345 for targets of 1370.75 for tomorrow.
All right, take that point, Mitesh. Godrej Properties and Federal Bank are your buy today stocks for a reverse trade tomorrow. Let's also get an insight into what dealing rooms are saying. Nimish, there's been a lot of consolidation. What are the dealing rooms making of this?
Well, it looks like it's a healthy consolidation around those all-time high levels. That normally happens when we see a big breakout and then markets tend to consolidate for a few days. So that's been playing out. In terms of flows, again, a day when it's a mixed day in terms of flows are concerned, I believe the volumes are going to be higher side because of two reasons. One, there were 3 large blocks. I'll talk about that in the chat room as well. But apart from that, I believe there's going to be few Pinot transfers as well. So that's leading to large volumes in today's trade. That's the overall feedback. In terms of sectors, the financial stands out again. But within financials, looks like there is a bit of rotation as well. So the NBFC stands out today. They are buzzing in trade. At the same time, there is a bit of profit booking in some of the private bank stocks. That's the overall feedback. Surprisingly, some of the smaller banks are doing well as well in today's trade on huge volume. So that's where the interest seems to be from the trader community. I guess from a technical point of view, 18,300 to 19,000 is the level what a lot of dealers are talking about. It's going to be in that range for the few days. So that's clearly playing out. I guess, now it looks like while the markets are consolidating, there is a tendency for small caps and mid caps to outperform. December historically has been a strong month for mid caps and small caps, and that's slightly playing out now in the small caps as well. So if you see a lot of small stocks are buzzing in trade on good volume, so it looks like the trader activity is back in that space. So that's something to watch out for the next few days. But today, I guess it's a day of consolidation. The volumes are on the higher side and some large blocks today.
All right, take that point. In fact, the mid-cap index as we speak has hit a record high as well today. So What are the individual stocks? You spoke about some of the bulk deals that took place, and you have any insight on them?
That's what. So I'll talk about the first three large blocks which happened today. The first is Gujarat Fluoro. That stock is down 5% after a large block. Actually, the block happened at a dip discount, so the stock is under pressure today. But in terms of activity, I believe the promoter entity was likely seller, and some of the large HNIs and some domestic funds were buyer. What is important is, what I understand with this block deal, the overall overhang on the group entity as far as the intercorporate loans are concerned will be done with. So that's a positive way to look at it. But today the stock is under pressure because of a large block. The second is Go Fashion. Even there we saw a 3.5% equity changing hands, and I believe one of the leading private equity investors was a large investor there, was a likely seller in today's block. So that's the second one. And the third one is Rainbow Hospital. That was a large block, 15% equity change hands, and most likely it's going to be the CDC who's a likely seller in today's block. But interestingly, in terms of buyer, I understand one of the long-only sovereign fund was a buyer in today's block. So the disclosures could be important as far as Rainbow is concerned. So these are the three large blocks. The second one is Tata Motors. The stock is mildly under pressure today, but I believe this is the time. I mean, this is the level where some of the long-only funds seem to be quite active and are looking to buy at these levels. So there is a bit of buying activity in Tata Motors in today's trade. And the last stock is Eris Life. Again, there is a very strong buzz of a large block deal in Eris Life very soon. So that's something to watch out for. But today, I guess the big talking point was the three large blocks where a lot of PE guys and strategic investors have sold.
All right, thanks a lot for that, Nimesh. Three large block deals taking place today. Let's see who the participants are, and possibility of another one happening also is what Nimesh has hinted at as well. With that, it's back to you guys in the studio.
Thank you, Nimesh, for highlighting that. So Eris Life is the next one you need to keep on your radar. By the way, watch out for IT names. Now, Infosys shareholders approved the buyback. Remember when they came out with their numbers in October, the company had approved, the board had announced an open market buyback. Size was 9,300 crore rupees at a maximum price of 1850 crore. This was known. What happened on 2nd of December, that's last week, is that the shareholders approved it. And now IIFL saying is typically the buyback starts about 7 to 10 days after the shareholder approval comes through. So perhaps sometime next week we should have the Infosys buyback opening. But separately, we also had a very interesting note coming in from Nomura, where they analyzed some of the usual clients of these IT companies. So they analyzed the numbers of 1,000 out of the top 2,000 global companies. And what they're seeing is that the revenue estimates of these companies are actually deteriorating. So earlier, technology companies, which again are clients of your TCS, Infy, HCL Tech, Wipro, etc., these companies were anticipating a near 10% growth for next year. Now they're only anticipating a 4% growth. Financial clients, they were earlier anticipating a 6% growth for next year. Now in November, when you poll them and ask them, or you ask analysts, what's the kind of growth, say this large bank is going to have, they're saying that possibly minus 0.4%. So basically, growth estimates of very large companies in the US or globally, top, 1,000 out of the 2,000 are actually deteriorating. Now, tech spends, of which clarity will emerge only in January, tech spends are linked to revenues of these companies. So if the revenue estimates are actually deteriorating, there is a chance that tech spends itself will come down. So in that sense, Nomura says there are headwinds to growth for the IT industry, and therefore it makes sense to be selective. They like Infy in the large cap space, they like Persistent in the mid cap space, but they have a reduced rating on TCS. But that said, it's always two different opinions which make a market. JP Morgan, as Nimesh had highlighted, actually went and downgraded Persistent, saying that they've had a fantastic run up, and therefore from here on they don't see too many re-rating triggers. So that's the latest that we've got today on the IT sector. Neeraj Diwan, the director of Quantum Securities, is now with us on the show. Neeraj, would you say the outlook for IT continues to be very headwinded and it's already priced into the stock price, or do you think on the margin, it's actually getting better and therefore this is the right time to invest in IT?
Yeah, good afternoon. Actually, some days back, definitely we could say that the headwinds are priced in. When Infosys was available at 20 times on a forward to 1,400 rupees. The TCS was also at much discount to the current prices. But now, after we've seen a run-up of more than 10-15% from that bottom that we saw, in some cases even 20% in some of the mid-cap name, I think then now again you feel that comfort on valuation is not that strong, looking at some of the concerns which may arise later in the first quarter of next year. So I think now if one has already bought at the low prices, because these are stocks which are very strong businesses, which are very strong growth trajectory, which will happen because of the US demand. But overall, they are in an uptrend as far as the growth is concerned. So if you already bought at the low prices, you can hold on to them. I think there's no point really chasing across the board, but stock specific, you can still look at companies in the mid cap IT, which may still have some valuation comfort, and invest in them with a longer term perspective.
Okay, hi Neeraj, good afternoon. Neeraj, what about from the pharma space? That's a sector that's really not got off the blocks. It's not really moved actually in the last 5.5 years or so, the index itself. But there would be stocks that have been doing their own thing. One of the big value eroders actually has been Strides Pharma. At around 370 rupees, it's up 6% today. Any view on this one, or from the pharma space, do you like something?
I can give you a view on the pharma space, not on Strides particularly, but in the pharma space, you saw this big growth which came because of COVID, and everyone was chasing pharma stocks, and we saw a good appreciation in the stocks also. One of my favorites in the sector was DV's Lab. There also we saw a good appreciation. But now, even if you compare, even if you see what DV's Lab is doing, they're also now going through a transition phase. They are shifting from their COVID portfolio to a regular portfolio where therapeutics and other ingredients were involved. So I think this is maybe the kind of scenario for a lot of the pharma companies. So I think this quarter that have gone 2-3 quarters, and the next couple of quarters can again be that stage where you won't get too much clarity on where the growth is going. But over the longer term, Sun Pharma, which are doing very well, Cipla is doing very well. Besides the COVID, they already had a very strong portfolio. So they're coming back into that. Growth is also coming. But that appreciation which you saw may not come for some more time. Some more consolidation may happen in the sector as far as the stock price are concerned.
Neeraj, do stay on. Need to slip into a very short break. We're also getting your audio, a bit scratchy, so we'll try and address that as well. Get into a break. We'll come back with more market talk and the market closing as well.
What the outperformance of the Nifty Bank and the support of metals have done is that towards the last few minutes of trade, it's taken the Nifty back into the green, back above that 18,700 mark. For closing, it may close below that 18,700 mark on account of the volume-weighted average price. But for the record books, it is important to know that the last bit will perhaps be above that 18,700 mark. A bunch of stocks actually doing well. We have Hindalco, which has moved to the high point of trade. JSW Steel, the metal stocks have been performing well through the day and now ending at the high point of trade itself. Adani, and the latest entrant on the Nifty too, has moved into the green and moved towards the higher end of today's trading range. Neeraj Diwan is still with us. Neeraj, the last time we spoke, you did indicate that there is still some room for all the IT stocks to perform going forward. Do you still hold on to that view? And to that extent, will you recommend buying here?
Yeah, that's what I mentioned. Though I'm still positive, if someone is already holding on to them, you should hold on for some more gains. But I think as far as the larger sector is concerned, I think you should now be very stock specific and look at opportunities in the mid cap space. There may be some opportunities there, whether it's something like a Mindtree or a LTI. I think there you still have some upside potential. So you can be stock specific even at these levels.
One more question. What about Tata Motors? Now, Tata Motors has great linkages to China. Do you see China demand roaring back, or do you think it'll be a far more gradual climb up to what it was even once the economy opens up? In that question that I'm trying to get at is, should the investors, should traders jump the gun and buy companies which are linked to the Chinese economy and the reopening? Say names like a Tata Motors, for instance.
Yeah, actually, if you take the example of what happened globally and in India also, when the opening up happened, it was actually pretty gradual. There was a lot of pent-up demand which came. So there is a possibility, if the way they are saying about China opening up, then you have to be sure if that really happens. So, that question mark will always be there. So if opening up is really happening in China, I think there can be a lot of pent-up demand which may come in. And Tata Motors, if you see domestically, they've been doing pretty well, whether it's their, passenger vehicles, EV portfolio, their commercial vehicles, they've been doing pretty well. So main concern has been China and UK. So if China is opening up in UK also, maybe the problem that peaked there, Tata Motors can be actually a contrabuy at these levels. And because if you compare to other automotive stocks like Mahindra and Mahindra and Maruti, they've not really performed to that extent in the last 6 to 8 months. So that can be one surprise trade there if things are improving in China and UK.
Okay, so you would bet on Tata Motors. The stock has been declining for the last 3 days. Today as well, down close to about 1.5%. Neeraj, thank you very much for sharing your insights, your time with us on CNBC TV18. As we get into the market close, we'll quickly get you some market opinion that we got earlier today from Gautam Trivedi of Nepean Capital.
MSCI Asia ex-Japan, it saw a 17% rally. It's the second highest in the history that you've seen a single month rally of as much as 17%. Of course, a lot of that was propelled by $8.5 billion of foreign buying into China. And I think that's what I find as a bit of a concern for our market, given the fact that money invariably ends up flowing from higher valuations to valuations which are more attractive. We are still 130% at a 130% premium to MSCI China. So I think that risk clearly remains for the Indian market. From a foreign institutional buying perspective, domestic is a separate story. More than half the investors now in the Indian market, given the proliferation of demat accounts, have gone up 3x in the last 2.5 years. If I look at the absolute amount year-to-date invested in the Indian market, so FIs are a negative $17 billion. Domestic mutual funds are a positive $33 billion. And if I look at the NSE data that comes out on retail participation in the market, we're roughly about 8 or 8.5 billion of retail year-to-date net. These are all net numbers. So if you add that up, you get about $22 billion of net flows into the Indian equity markets, counting everybody who's participating in it. If another $5 billion inflows or outflows were to come into this market, again, keeping in mind that our total market cap is as big as 3.3 trillion, fourth largest in the world, another $5 billion inflows or outflows could have a significant market impact. I still stand by the fact that we are in the middle of a bear market rally. We're not out of the woods. The other thing, of course, is if you look at the Bloomberg consensus for world GDP growth, it's down from, as in this year, estimates are 2.9%, and next year, 2023 calendar, are anywhere from 1.8 to 2%. So clearly a slowdown. The question really is, how deep does the recession in the US and Europe get to? And nobody has an answer to that. Now, if you look at the MSCI all-country world index, the United States accounts for 61% in terms of weightage. So that will drag down the rest of the world if a recession were to get deep.
Well, we had the full day's trading, and in fact, we're going to end as flat as can be. Mitesh, what do you make of today's session? It appears the Nifty wants to spend some more time in this range of from 18,600 to say 18,800. Range-bound trade you're expecting?
That's right, Nigel. I think my belief is that we have had an expansion starting from the 22nd of November till about the 1st of December. And then I think we're just giving away some gains, trying to consolidate higher levels, and therefore the markets could be contracting a bit. The idea is that you should be buyer on declines. The preferred levels, of course, are slightly lower at about levels of 18,470 to about 18,500 zones. But in case you don't get it, then I think after a day or two of consolidation, you will again see that spark on the upside, which will be a buying trigger.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's wind down the markets then. It was a decent day of trade. Buy on dips did play out yet again. Metals was the stock in focus. The Nifty ended more or less flattish. The metal index was up close to around 3% on. Stocks that did well today. Hindalco was up close to 4.5%. So metals, that's ferrous as well as non-ferrous, both of them did well. Hindalco up 4.5%. Tata Steel was up close to around 3%. Giving it company on the upside was the likes of UPL as well as Coal India. Remember, UPL has a fair bit of global exposure. So maybe if you don't get a very hard landing in terms of recession, that will be a pretty good news as well. So that one did pop up and trade. It has valuation support as well. Reliance Industries, well, it was good news actually to see the Nifty ended flattish because the biggest player didn't participate today. It was down closer around 1.5%, and Apollo Hospitals as well was down closer around 2%. But Rima, the positive for the last few days has been the mid-cap outperformance, and that continued yet again.
Absolutely. The mid-cap index up 0.1.2%. Advanced decline ratio 3 in the green for 2 in the red. For the month of December so far, the Nifty is down 0.3%, while the mid-cap index has gained 1.1 and nearly 1.5%. There were 3 large block deals which took place in trade today. So Go Fashion, Rainbow, as well as Gujarat Fluoro. So that dominated some of the market moves. Banks made a comeback. Some of these mid-cap banks, so Punjab and Sindh, J&K Bank, had big up moves towards the end of trade. A couple of the other stocks which stand out on the volume front include Suzlon Energy. It's a 10 rupee stock, up 8%, but very large volumes. And Bajaj Hindustan, which is locked in an upper circuit of close to about 10-odd%. Metals did well even outside of the index. Names like Nalco as well as SAIL were higher in trade. But we wrap up the market with fairly flat on the benchmark indices, so it turned out to be a day of consolidation. The banks continued with their outperformance, and so did the mid-cap index. Today, post-market hours, we will get the exit poll outcomes for the 2 key state elections in Gujarat as well as Himachal Pradesh. So that is something the market will react to tomorrow. And of course, towards the end of the week, we will be tracking what the RBI has to say and the extent of the rate hike this time around for the month of December. With that, we're going to wrap up in Closing Bell. Thank you very much for watching. Wizards of Dalal Street comes up next.